Hi, I'm Urmi Desai, editor of MoveSmartly.com, and this is the Move Smartly Show. This week's episode is what my colleague and I, John Pasalis, my co-host, like to call Move Smartly Ideas. This is where we take a deeper look at the housing economics and policies that affect the market as a whole. Now, normally we're usually talking about something someone else did, whether it's responding to the latest government initiative at whatever level of government in Canada to tackle our housing crisis, or discussing an expert's recent take on the housing market and what could be done differently. But today we're going to be talking about something that John recently did. John recently completed his doctoral research and finished his doctoral degree on housing. So we're going to talk to John about what he's found and what he got out of the experience. As always, if you enjoy listening to our show and find it informative, I'd like to ask you to leave a positive review, share, or like. And as always, we thank you for your support. Now, on to the show. Hi, John.
Hello, hello.
So, congratulations on your new doctorate.
Thank you so
Tell us,
much.
tell us about the program you recently completed.
It is the degree is called a Doctorate of Business Administration. So it's technically a business degree, but it's geared towards people in business and industry who are doing research. And the research can be like whatever your sector is. Mine obviously happens to be in housing, other people's is in energy and just different industries. But it's geared towards people who are doing kind of academic research in their specific fields. It's a part-time degree. But yeah, it's like a doctorate. So it takes like 5 to 6 years to finish because you have your master's portion and then your thesis portion, which you have to defend. So yeah, I just wrapped it up. It was through a joint program between the University of Toronto and the University of Reading in the US. So I was introduced to it because I went to U of T when our old professors is still there. He recommended it. So yeah, it's basically based out of the two schools.
Nice. Now you said the US, but you mean the UK,
Oh,
Reading
the
in the UK.
UK. Sorry, yeah, the University of Reading in the
So
UK.
when you graduated, did you wear a Harry Potter gown?
No, I did not go to my graduation. No, I
Why? Because
skipped
you had
that.
to wear the gown?
No, I mean, it's just not really my thing. Yeah, because the degree's mainly based out of Reading. They're running the program. I would have had to kind of go over there, and I don't know. I'm not really that big into these ceremonies. I just had them ship it over, so I didn't show up for my graduation. I'm one of those people.
On to your next goal.
Yeah.
Well, at that the two locations or that shared aspect of the degree sounds interesting. We'll get into why that is.
Mhm.
But first, I'm wondering why, since you already run your busy brokerage practice and you're a frequent commentator on real estate issues, did you decide to pursue this degree in the first place?
I'm still trying to figure that out. I mean, I'm joking. I mean, it's actually it wasn't, in all honesty, it wasn't overly well planned or thought out. I mean, I really met my so in 2017, I was doing research on Toronto's housing market. We had this big investor-driven kind of bubble that just had unfolded. And I was doing some research and just needed some help because I hadn't done a ton of econometric type stuff in quite some time. So I met with my undergrad econometrics prof. His name's Walid Hijazi. And I'm like, this is what I'm doing. I need some help. So we met over coffee or lunch. I can't even remember. And he said, I have an idea. Rather than just me help you informally over the next little while, he said, why don't you enroll in this program? You know, I'll be able to help you. We'll be able to dig into the data further. We'll base it on academic research. You'll write a more formal paper and you'll get, a master's and a doctorate out of it. And by the way, the program starts like the next round starts in 2 months. So you have like 3 days to decide if you want to do it. So I thought about it and I just did it. So it wasn't overly, I mean, I'm kind of one of these people who likes to read and likes to do research. And I mean, I was reading academic papers before that anyways. So just the idea of, being in an environment where you have people who obviously have a lot more experience than you can kind of guide your thinking and shape your thinking in a more structured way, I think appealed to me is kind of more than anything. It's just was more personal development. It wasn't really anything beyond that. So that's kind of the main motivation really for me to do it. So Yeah. Yeah.
Nice. I'm not sure how many of us remain that close to our undergraduate professors, but a very interesting journey. So let's talk a little bit about your research. Your business is real estate. So
Yeah.
what did you focus your research on?
Yeah, so my focus was on Toronto's housing market, and specifically, what I was interested in looking at because we had gone through this kind of housing bubble effectively in 2017. Really, I wanted to look at, when housing markets go through these periods of rapid appreciation, bubble-like appreciation, if you want to call it that. Um, does the market kind of deviate from equilibrium in the same way, regardless of geography and house type? Or does certain regions of the city or certain types of homes deviate further than others? And by deviating, to be clear, I'm not talking about just price appreciation. We know that different neighborhoods appreciate at different rates for different reasons. I'm talking about like the growth relative to the growth in prices relative to the growth in rents, kind of is roughly how we measure sort of the deviation from equilibrium. So were there some areas that are more exuberant than others? And are there some house types that were more? And if there were, to what extent does sort of demand from investors actually influence that, if at all, is kind of what I basically want us to look at.
So formally, the wonkish title is The Spatial Dynamics of House Price Changes.
Something like that. And
Is that
investor
correct?
demand or something like that. Yeah, yeah.
And the impact on investor demand.
Yes.
So, what did you find? I guess you went in there, you were trying to see what would make certain parts of the market more exuberant and whether does that mean it was the activity of investors, i.e., where there is that exuberance? Is that what
So,
you were looking for?
yeah, so the first step is just figuring out whether prices deviate, we'll say like heterogeneously, meaning just differently across, across region, across house types over a longer period of time is the first part, ignoring what the cause is, because it's of course difficult to determine what might cause that. So the first step is just figuring out if that happens, right?
Empirically, to
Empirically,
assess whether empirically you're seeing it happen.
yeah, exactly. And again, to be clear, like, we're not talking about appreciation. Like I said, we know that different areas appreciate the difference than others. The idea is, if our starting point is, this home price is sort of rational relative to this relative rent in a particular area, we're looking at how those two deviate over time, right? So if prices surge rapidly and rents stay the same, then in theory, that area has significantly potentially deviated from equilibrium. This idea that rents are an important factor in determining what makes sense. So yeah, so that was kind of the foundational part. And then once we look at that and say, okay, there are differences or there aren't, then the next question, of course, is, well, do investors impact that? And again, I think a lot of this is driven by the fact that, I'm basically using very local data and can measure differences in the relationship between price and rents across different municipalities and house types, but also differences in the rate of investor demand across geography, across house type, and across time. So we have sort of metrics for all of these things, and it can help kind of give some insight into how those things are changing over time.
Interesting. Now, usually when I read about what makes a housing price or a home price rational, we
Mm-hmm.
hear a lot about, X times income,
Mm-hmm.
and whether the incomes in the area sustain that home price.
Yeah.
Why would it be the rents in the area that are linked to determining whether those prices are rational?
It's a good question. I mean, and there's different methodologies to determine if prices are rational. Like the one that you talk about is certainly one method where economists don't just look at incomes, they'll look at unemployment or employment, they'll look at population growth, they'll look at interest rates, they'll look at all sorts of macroeconomic factors. That's definitely one method. I couldn't use that because I was trying to find very hyper local trends, and those are macro variables, right? So the other methodology that is often used is basically this what's called a user cost model, which basically compares the cost of owning a home minus the benefit, which is the appreciation, and it compares that against renting. And the idea is that in equilibrium, you should be indifferent between renting and owning after you take all of these things involved. So I use that methodology because it allows you to effectively kind of measure deviations from equilibrium at the level of each individual home at any given time. Because if you know what it rented for, and you know what it was bought for and sold for, you know the property taxes, you know all the costs, and can reasonably estimate many of them, you can calculate that at the level of the individual property, and then of course roll that up by geography type and over time. So that's why I did it that way. And again, that's just a different methodology that's used.
Interesting. And then again, why the focus on investor activity? Is it because these are the type of, I guess, buyers of real estate that have different motives than we would normally see? For example, you were saying that you would expect to see indifference towards renting and owning for
Mm-hmm.
just end users, right? If
Yes.
all things being equal,
Yeah.
because you're just looking for a place, a shelter over your head. And if we strip away some of the other um, factors,
Mm-hmm.
then those things should be interchangeable. But
Mm-hmm.
what is it about investors? Why do they become something special to look at?
So, I mean, I focused on investors partly because it looked like at the time in the GTA that we had a boom in house prices that was largely driven by investors. I'd written a report earlier that year in 2017 that looked at that again at the time when prices were exploding. The news had a particular narrative that prices were going 30% per year because we're just not building enough homes and it's a supply problem, and that was kind of the narrative at the time. And then in March of 2017, I published a report that said, well, I don't think I agree with that. I think this is what's happening. It looks like it is a bubble driven by a rapid surge in investors' demand. And we were able to quantify that by basically looking at every home that basically sold on the MLS and then tracking to see if that's the person who bought that subsequently listed for lease, right? And again, it's not a perfect methodology because not every home that's listed for lease is listed on the MLS, but at the end of the day, it allows you to track the changes over time. And it looked like the areas that saw the most rapid increase in price growth were the areas that saw the biggest surge in investor demand. And the Bank of Canada cited that paper. And then a year later, they took some of my data on investor data and found that when prices crashed, they crashed disproportionately in areas that had a huge run up in demand from investors. So it looks like there's this relationship, of course, during periods of exuberance, that it's sort of this speculative investor kind of motivation that push prices higher than they should be. And that's not to say that this is the only factor. There are many other things, but again, it's the one thing I focused on, and it was kind of the one variable that I could find at a very local level over a longer time series. It's hard to get any other factors that may have caused these, regional differences.
So your first look into it was a smaller report that you wrote,
Yeah.
and I believe at that time we saw some bubble activity. And was it freehold homes in York Region? I
It was
remember your report.
Yeah, it was the suburbs, but York Region sort of had the biggest surge. But yeah, generally the suburban markets, and less so in the city of Toronto. But it was largely a suburban kind of investor boom.
So when you embark on this more formal approach to your research, were you looking at all of the Toronto area and maybe measuring it over a longer time period? And
Yes. And
rather than
included condos, because at the time I hadn't even looked at the condo market for a couple different reasons. Yeah.
interesting. And how long was the time period that you were able to measure?
So the time series went up to 2019. I mean, I cut it off because COVID just screwed things up after that. I mean, I could have used the COVID data, but things got a little bit crazy. So I think from around 2006 to 2019, I believe, something like that, like 15 years.
And were your results the same when you looked at it on a broader basis?
Very similar. Okay, so I mean, it was interesting because there were differences. So certainly in the low rise markets, on the market for houses, there was some, obvious uniformity when investors kind of demand accelerated. Certainly, many of those places deviated from equilibrium further, and the higher the demand from investors, usually the higher the deviation. But again, there were different some areas that didn't deviate as much for some reason, which kind of says like, well, why were investors going towards one area and not the other, which I don't have all the answers to. So definitely in the low rise market, there were similar trends. The condo market was actually quite different. And and in some ways, the condo market responded in a similar way to, I think, the way that the data suggested, which was it wasn't as exuberant. Even though there are and this is the challenge with investors, and I think the nuance with it, even though there are investors in the condo market, they're of course filling this gap of rental supply that hasn't really existed. And for the longest time, largely, if we look at the resale market, condo pre-con's completely different narrative. It wasn't necessarily driven by exuberance. So even though the condo market had a decent number of investors, the prices people were paying relative to the rents were actually more rational, right? So they didn't kind of deviate from equilibrium the way low rise house prices did. So, when low rise house prices deviated, it's just basically like it was irrational, this disconnect between what people were paying for the house relative to the rent that they were earning. Just didn't make sense, right? And we didn't see that quite as much in the condominium market. So we just saw less volatility in these peaks and valleys. So, and again, I think that's the nuance when we think about investors. It's not so much how many or proportion, like it's just these periods of exuberance, right? Because there's always some investors in the market. It doesn't mean it's always a housing bubble. It's just that those periods, and probably what we saw in 2022, where again, we saw this COVID acceleration, was driven by a bit of exuberance. That's really tough to explain and define, but that's what it looked like in those periods.
Interesting. And I guess if you just think about it, sort of a layman thought, renting out a full home,
Mhm.
presumably the market for that would be smaller than, individuals, students, all kinds of people renting condos. So as you were saying, that condo space, there's a need there. I guess, everybody that would be renting apartments, purpose built or not.
Yeah.
But what would be the purpose for investors, for example, rushing in to single family homes then? If they couldn't make the cash flow they needed through rents, what accounted for their exuberance?
So, it's really tough to say because again, a lot of this is herd mentality, but I think and it's interesting because low-rise homes are of course more expensive, right? Back then you'd be able to get a condo for half a million or whatever it is, and you'd be spending 1.2 million for a detached home in York region, earning, peanuts on your rent, like 2,500 bucks. I can't even remember what it was. Um, so the motivation, I mean, certainly I think there's this idea that real estate is a good investment, and this bias towards owning low-rise homes, which we're not building anymore, would pay off more in the long term, which I have to admit in theory is a correct narrative. Like over time, it's reasonable to expect low-rise house prices to appreciate more than condominiums, but that doesn't mean it doesn't matter what we pay for the low-rise home, right? And I think that's what happens in periods of exuberance, that uh, it feels like it doesn't matter and this is like the narrative. People say it doesn't matter what you pay, it's just going to be worth more tomorrow, right? And this is the motivation of people in those times. I mean, I talked about in my reports, like people would come here and we'd be like, you're bleeding cash. Like once you look at your mortgage, your property taxes and your rental income, you're going to be short like 1,500 bucks a month minimum, assuming rates stay where they are. And everyone's just like, I don't care, because it's going to be up 100 grand in a year, right? And when home prices are appreciating that rapidly, we call that irrational, but in some ways it is rational, right? The problem is, of course, there's a limit to that. Home prices cannot be going up 100 grand a year forever, right? And I think it is, again, this thing that leads to this herd mentality that kind of push people there. And eventually, when they appreciate just too rapidly, as we saw in 2017 and in 2022, something happens that just the market turns, obviously. And in both periods, I think prices fell something like 20% from their peak.
which hurt people again in that short term. You can make
Yes,
money in the long term, but not if you're caught out. Um, and
exactly.
and I guess this gets me thinking, if the price points for low rise homes are so much higher,
Mhm,
it would need for investors in that category to be better capitalized. Now, is it
mhm,
the case that the more access to capital or something you have, the bigger the bet you can make and almost not care? Whereas if you're investing in a condo unit,
mhm.
you're investing in a cheaper product, and also maybe you are more sensitive to what income you can generate off rents. Is that fair?
Yes and no, because yeah, you need more capital to buy a low-rise home, but it doesn't necessarily mean they're paying more than 20%, right? Just that 20% is double what it is for a condo. And so their cash flow situation is probably going to be worse than what it is for a condo, right? So
Right.
yeah,
But
so
if
they
you're better capitalized in the first place, like you would need to have access to more capital to be able to sustain those money
Yeah,
losing
no, but
cash.
yes and no. Like you need more capital to actually buy it because you need 20% down. So
Mhm.
of course, if you're buying 1.2 million versus 600,000, you need double the down payment. But it doesn't mean you're way better off because now you got $1 million mortgage instead of a $500,000 mortgage, right? So you still have this cash flow burden and crunch that is weighing on your monthly finances in a way that is not happening for for condominiums as much. Now, listen, there could have been some people who were putting way more than 20% down. Like we don't know that, and it's very possible that they were even more well capitalized than that, and they were putting 30 and 35% down, and they just wanted to be in low rise. Very possible, and that's one of the factors for that.
Interesting. Okay, so what should the average home buyer take away from all these metrics?
Well,
What should we know if we go in and we know that at times certain parts of the market get bubbly?
yeah.
If that's your finding, what, how should we use your finding, I
Yeah,
guess?
certainly. I mean, I think the research focused on bubbly dynamics, but at the end of the day, as well, like there are other kind of key things out of it. I mean, certainly, like I said, this idea of a particular area's appreciation relative to the norm for that house type or for the GTA is going to be different, and in some cases it is driven by this exuberance, so it deviates. Sometimes it's not, right? And I think, a lot of times when people come to us and they're like, well, I want something that's a good investment. I want something that's going to be appreciate over time. And, when we think about that, you have to think about that decision because there's, I mean, sort of two components to it. One is which asset type or house type is likely to perform better over time, low rise or condos. And then, once we've kind of made a decision on that, assuming we can afford houses, which are likely going to appreciate more over time, the next question, of course, is well, what geographic area is going to outperform the market? Which one might be appreciating at a higher rate? So it's not just about bubbles and exuberance, it's all of these factors as well, because there are differences. And I think people need to be mindful of these differences. People are looking in these outskirts of the GTA, like in cottage country, thinking, oh my God, these are great investments. These are like terrible investments. And not just because in hindsight, we're seeing that they fell in like that was predictable in that moment. And the challenge is you get all these realtors that are like, it's a great investment. You can buy a condo and Airbnb or a cottage and Airbnb and make all this. Well, yeah, I mean, listen, if you're looking at capital appreciation, those are generally not the best performing types of houses. And I think people are paying the price for this bad advice. I think if nothing else, I think it's people needs to be more mindful of the advice they're getting and sometimes be critical. The reality is most people in my industry don't know that much about what the hell's going on. They're kind of just, especially about some of these more, I guess, complex nuances and details. And not to say that I have the answers for all of it. Obviously, when we think about where prices might be in the future, these are just educated guesses. Just to be clear, I'm not suggesting I know where things will be, But your educated guess must be rooted in education that extends beyond, your realtor courses, that people are taking. So I think just people need to be more mindful of that.
So different classes of assets appreciate differently. And when they do see rapid patterns, I guess, or of appreciation, they may be because of the influence of investors. And I guess not always, but in that case, you'd need to be careful.
Yeah, we need to be careful. Exactly. So especially if we are in periods of, you want to be mindful of that, because if you're buying in those areas that are dominated by investors during a rapid appreciation, your home's value is more vulnerable. Like we kind of know that, right? So, yeah, definitely we would want to be mindful of that during these periods of exuberance.
So I guess if you're investing because you've been lured by a seminar or something else saying that this is a great investment opportunity,
Yeah.
just be aware that hundreds of other investors are being told the same,
Hmm.
right? So, you're not being let in on a secret that no one else is aware of. And that in and of itself may be part of the explanation for why those appreciations are happening.
Yeah, exactly.
Right. I mean,
100%.
it's not quite Ponzi scheme territory, but it has that pattern, right? Of the gambler's excitement then creating
Well, yeah,
more
it's
winning.
like a self-fulfilling kind of outcome for a while. You know what I mean? It's like the
Right.
excitement, and this is the tension, like in any like research, you know, like just because, for example, my research like ultimately found this relationship between investors and house price appreciation, you can't you can't effectively suggest which way the causality flows, right? Like, are the investors the cause of rising home prices, or are home prices rising for other factors and investors are just going in with a higher appreciation? So you have to be very cautious to, when you're thinking about these problems, because it's not very clear always which way the kind of the causality flows.
Now, I've mentioned the gambler's excitement that we've talked in the show about Robert Schiller and
Mhm.
his colleagues who won a Nobel Prize observing some of these patterns
Yeah.
in the housing market. Did your own research sort of match those kind of findings, or how did it fit in, I guess, to what other people had looked into?
Yeah, that's a great question. I mean, some of my takeaways were consistent, but the reality is, I think the approach that I took, there weren't a lot of people who have done that. I mean, because there aren't all, like getting data for rents for individual homes and condominiums is generally hard to do. So there aren't a lot of actual academic papers that kind of approached it in this way, right? Some have with very narrow sample of data, like several hundred listings or things like that. So there weren't tons of papers that have kind of done kind of what I did. There are some that use a very similar methodology, but more looking at how this impacts inflation and user costs, because effectively the methodology I use is very similar to what Statistics Canada uses to measure inflation in kind of owner occupied housing, the user cost model. So yeah, different. So definitely some of my findings were very consistent with the literature, but this idea of like measuring it geographically and deviations from equilibrium by house type is a little bit different. There weren't too many papers that have done that.
Now, what were the biggest challenges with trying to look into what you were looking into?
Oh, I think that was a challenge. I mean, just, it's funny actually when I started when I went into the program, I mean, I kind of just naively thought I could just do whatever the hell I wanted to do. Um, because I mean, that's kind of how I wrote my reports, right? I mean, I just kind of thought of a methodology. It's not like, even though I'm reading papers, it's not like I saw the perfect methodology
You
and
kind of
copied
thought of
it.
a question and then kind of figured out how to answer it, sort
Yeah,
of thing.
exactly. How to answer it with the data.
Mhm.
And that's actually what I was thinking of just doing. But apparently you can't really do that with academic research. If you're trying to come up with a new way to do something, a new methodology, I mean, as an academic or as a student, I guess is more accurate term. It's like trying to sprint before you've learned how to walk, right? You're just going to fall on your face effectively, because it's very difficult to kind of defend it when your panel that you're defending to, your academics, don't have anything to compare it against, right? So the challenge was just finding other research that is closely related to what I'm doing, has used, different approaches or whatever, and then just working from the existing literature. And I think that was the trickiest part, is just figuring out a model and approach that others had done. And obviously what I'm doing is slightly different, but the approach and the framework and the methodology has to be rooted in what others have done largely. And that was kind of the trickiest part, I'd say.
Because as you suggest, that kind of approach is hard to do given the data available.
Yeah, there just haven't been that many papers that have done that exactly. Because, like, if you look at most papers, and like it's the rental data that's the hard part. Everyone has like real estate sales transactions, but rental data for owner occupied housing is really, which is what condos and low rise homes are. The data that we're using is relatively rare.
Interesting. So I'm wondering if it's hard to measure this. I wonder how many attempts there have been to look at this in a more universal sense. Like, are the dynamics you're seeing in Toronto
Mhm.
similar to other dynamics you would see? Are they universal, or are they greatly shaped by some underlying dynamics unique to the Toronto real estate market? So, in other words, do these conditions with investors arise everywhere?
That's a good question. And I think you have to be cautious when looking at a study in one city at one point in time, to draw universal conclusions. And I see people do this all the time on Twitter, where everyone just reads a paper that validates their view and they think it's gospel, which, I mean, it's just completely nonsense. I mean, the reality is housing markets in different countries are fundamentally very different. So you cannot just take one study in Toronto and assume that applies everywhere, right? Because even within Toronto, like I said, there are just differences in the nuances of our market. Even though condos had a decent share of investors, prices did not deviate from equilibrium, whereas they did in the low rise market for different reasons. So it's very hard to just come up with these universal conclusions. I mean, certainly we know that, when investors rush in, there's these periods of exuberance and all of these types of things. But again, just measuring the volume, the impact, all of this stuff, it's so hard to kind of just say, yes, this always happens, because again, the markets, the results are a little bit more nuanced, and they're a function of the market. Like, one of the reasons why maybe we didn't see this exuberance in the condo market is because we haven't built purpose-built rentals for a long time. You know what I mean? And this is a nuance specific to Toronto. I see people looking at studies from Europe, which is just completely insane, because like their housing markets are so different. They have like so much non-market rental housing. So they're not, you can't compare Canada to the Netherlands or Germany. So certainly I think we have to be cautious. But again, like any academic paper, there's still insights you take, and they shape another researcher's research in their housing market, whatever benefit they can get from it.
And yet it seems that a housing affordability crisis
Mhm.
itself is not unique to Canada. It is actually a problem in European countries and many countries in the US, many
Mhm.
markets in Australia and other places. So the reasons for some of these run-ups might be different. I take your point. But why does there seem to be now this global, um, I guess, experience of market unaffordability or price run-ups?
It's very hard to kind of pinpoint a single cause. I definitely think there are different schools of thought. In North America, and I think this, I'm going to hit pause before I kind of go in. I think, to be honest with you, I think this is kind of one of the things I got out of doing not just research, but the benefit of having a joint kind of program between a North American institution at U of T and a UK educational institution like in the University of Reading, because their approaches are so different, right? So, for the longest time, Waleed from Rotten was my main supervisor. and I'm practically done my thesis, and my Reading supervisor from the Henley Business School kind of came in towards the end. And, she basically said, like, this is great, but, you haven't thought about housing from a broader perspective. Like, you're taking a very North American approach to your questions, to the market. And, housing markets work very differently across country. And she basically made me write this whole other chapter that looked at kind of a broader look at housing markets in different kind of regions. And at the time, I was like, my head was going to explode, right? It's like when you're doing all this work, you're like writing another chapter doesn't sound like a big deal until like you realize you got to read another freaking 40 papers on stuff that is like not even directly related to what you're doing. So I'll admit that in the moment, I was like, I don't want to say furious, but I'm like, I just want this behind me. And now I have like another 6 to 9 months of work ahead of me. But I'll admit, like her, and I think this is what I think school or graduate school, all this stuff is important, is like different people will push you in different directions, right? And they'll make you read things you otherwise wouldn't have read, right? And you have to read them. That's the point. You know what I mean? There's not optional. And it was, and again, that experience is quite rewarding because you realize that there are very different approaches and concerns when it comes to housing. So, like I said, going back to the original question, North Americans are very, I'll say, like very right wing, very conservative in their approach to housing, right? And the causes and the solutions. The causes, it's rent control. Let's get rid of rent control and we're going to build, build, build. Let's get rid of zoning. We're going to build, build, build. Let's, allow cities to build the type of homes they have in Amsterdam and in Paris. And if we allow that in North America, our cities are going to look as beautiful as the European ones. We're going to be as cheap as Buffalo because builders are just going to build so many homes, prices are going to plummet. This is a very North American worldview. I mean, certainly European economists do not say we just allow more of the homes we have in Amsterdam, prices are going to fall because we have those types of homes in Amsterdam and prices haven't plummeted. So they're not, and certainly they're not like, let's get rid of rent control because they have a more integrated market where they actually have a lot more non-market rentals, right? So their approaches and their underlying concerns are very different. I think North Americans focus more on a very right-wing approach, freeing up the market, letting builders do whatever they want. The benefits will trickle down. I think Europeans have a little bit more concerned about kind of financialization of housing. Like you see a little bit more of that literature out there. And that's just, the role housing plays in the economy and the way financial markets drive house prices and capital and housing being used in investment and those types of things. So there's just, again, everyone thinks that they're like the data and the research has a definitive answer. I mean, all the academic data and research is rooted in some underlying bias depending on your own worldview. So certainly, I think there's just different approaches, and I'll confess. I mean, anyone who follows us, I mean, I think my view kind of skews towards more of the European approach than doing away with rent controls and assuming if you liberalize zoning, builders will build so many homes that they're going to drive down home prices for us all. I mean, I don't really buy that narrative, but again, different approaches in different countries, I'd say.
So you have to thank that professor that challenged you,
100%.
kind of like that trainer in the gym who makes you do that exercise you hate.
Yeah.
But somehow ends up being a piece of your research. Now, to end, you've talked about financialization a little bit, and I know that that's something you want to look into next. Can you
Mhm.
just explain a little bit more about what you mean about concerns around financialization of the market?
Sure. So, I mean, I think I think that's a term that people hear and it kind of sounds very academic-y or very nerdy, but I think the best way to think about it is this way, like, owner occupied, if we just focus on owner occupied homes, rentals a little bit different. There's always this tension between homes as an affordable kind of social right for society and a financial asset, right? And there's a tension because they serve both, right? And the more they lean towards housing as a financial asset, by definition, it's going to become less affordable and less of a social right and less available to people, right? When governments try to not prioritize housing as a financial asset, and we can talk about what that means, home prices just not appreciating as rapidly, they remain more affordable for owner occupiers, right? So when we think about what kind of financializes housing, I mean, for starters, our entire economy, financial markets, housing, the role of housing in our society has changed fundamentally in 30 years. I mean, if we just look at the data, more and more people are buying single family homes and like what are intended to be owner occupied homes as investments, right? And this is in the data. It's in Bank of Canada data, since Statistics Canada. More and more people are buying them, and they're disproportionately held by boomers. So our home ownership rate in Canada is falling, right? And it's not falling because we only built purpose-built rentals and we stopped building owner-occupied homes. It's falling because more and more of the homes that are supposed to be owner-occupied are used as investments, right? They're used as investments for wealthy individuals, wealthy households that are used by investments as corporations. Like if we look at the most extreme example in the US, big REITs, real estate income, are buying and funds, private equity funds, are buying tens of thousands of low-rise homes, right? Well, I mean, what do you think that's going to do to the market, right? I mean, obviously, it's going to drive home prices higher. And that, I think, has a very material impact, where the capital's coming from, how homes are being used, and the fact that we're financializing them as assets. Now, again, there's a different view in North America, where North American housing academics largely couldn't care less about this, right? Because if you ask them, they'll say, well, it doesn't matter that investors are buying them. It doesn't matter that corporations are buying them. It doesn't matter where they're getting their capital from. And to be clear, this is how you have a massive disconnect in terms of home prices relative to incomes. When you have Bay Street and Wall Street buying their homes, their purchases are not constrained by their incomes, right? They're getting their funds elsewhere. They're not buying based on the household income. So the more capital you have that is not coming from the individual households, the more you have this massive disconnect. Now, the Canadian or North American academics will tell you none of that matters. The only thing matters is constraints on the supply of housing. And if you just remove those barriers, builders will just build so many homes, like so many, that prices are just going to fall, and we will all afford homes and we will all live happily ever after. And I'm being slightly sarcastic, but this is truly, I mean, their narrative, right? That the only reason home prices are high is because of these apparent constraints on housing. This, to me, again, is silly, because there's a limit to how many homes we can build in Canada. Academics have been arguing that we can triple housing completions overnight. Canada can go from building 200,000 homes a year to 600,000 in a matter of a year or two if we just legalize housing. Well, that hasn't happened, and it's not going to happen because there are limits to that. So again, that's not to say that the reforms that they talk about are not important. I think the difference I have with many North Americans is I just don't think they're enough. And I think we need to protect our homes for people who are going to owner occupy them. And again, I think this is rooted in political ideology. Do you think owner occupied homes and the benefit of them should go towards the many, to the families, to the people who are going to live them and occupy them, or to the few, to the corps and to the richest families, right? And in North America, they lean towards, I'm fine if they go to the few. I couldn't care less. And I don't think that's a very reasonable position. I think, we should have policies that protect homes to be owner and occupied by families, by people, not REITs, not corporations, and not by the many. And yes, legalize housing all you want. Legalize single stair buildings all you want. It doesn't change the fact that we want to have homes that are intended to be occupied and owner occupied to be owner occupied and not used as investments. And we should build permanent rental housing, purpose built rentals, not have corps and the richest converting homes that were intended to be owner occupied as rental. That's not the best way to build. Because there's no tenant security either. The second that investor decides to sell it, all of a sudden these families are getting kicked out every year or two. So it's not a very good system. The wealth goes to the few. And again, I think it's just different ideologically from what the North American academics have been arguing for years. So
And
that's
interestingly, we're now in a period where when the prices don't make sense for developers, like they are not no longer
Mhm.
in pre-construction in Toronto, the building stops. So they don't build homes at any price. So if homes were suddenly appearing at the point where prices start plummeting, I'm not
This
sure
is the
builders would keep building anyway.
I mean, it's the YIMBY delusion, you know, like the YIMBYs are the yes in my backyard, the economists who are like the only reason we're not building is because of government constraints. Well, obviously not. There's no government constraint preventing builders from building homes today and flooding the market with supply. They can all do that. They don't want to because no one's buying at their prices. So they're just going to wait for prices to kind of reach the price they want, the demand to reach the price they want. So it's a delusion to think that the construction industry is in business to oversupply the market to drive home prices lower. But this is the narrative driven by, I think, most North American housing economists, most housing advocates, is that, and it's the same with rent control. This notion that if you just remove any rent control, that people will build so many condos that they want, or rentals, I should say, first rentals, that rents will plummet. That is the motivation of the builders. They really want to build so many homes that their revenue actually falls. This is what is driving them, which is a delusion. Again, if you look at anyone who's making investments into REITs, most people are prioritizing REITs in markets that are not rent controlled, like Alberta. Why? Because they're not rent controlled, because there's no constraint on how high they can increase their revenue. Not because if they expected prices to plummet, they wouldn't be investing there. So these are like the biggest kind of myths that North American academics have kind of sold the world. But again, this is the foundation of kind of housing policy, I'd say, in Canada and North America.
All right. Well, sounds like your degrees fired you up.
A little. I mean, certainly. I mean, obviously, these issues are important to me, and I think I kind of enjoy kind of being a somewhat minority slash outlying voice. You know, I mean, certainly most people who talk about housing in Canada don't share my position. I mean, certainly not in my industry, and certainly most academics. So I'm fine with that, and we'll keep kind of putting out our content from, you know, from, I think, the perspective that matters to me, and I think is more relevant to the average person.
And I guess your argument is that the numbers just don't bear out this the solution being proposed. And that's what your research is showing, that you're not always seeing what you would expect to see.
Yeah, absolutely,
You
100%.
know, so okay, so lots to think about, and I guess we'll just keep tracking these issues. Look forward to hearing more around financialization. I mean, it sounded like you went all European there in the end. How are you going to keep people from out of these homes if they want to invest in them?
Keeping what people out of homes?
Investors out of homes. Are you talking taxes? Are you talking bans? Are you
Listen, I think
talking?
it's not okay. Listen, it's not, and people kind of misinterpret, like, everyone thinks I'm blaming investors. No one's blaming investors. I mean, at the end of the day, we have to just think about the world we want. If we're blaming anyone, it's always governments. Am I saying it should be illegal to invest? No, it shouldn't be illegal to invest. But the reality is that the housing, if you want homes to be affordable to families, it cannot be a cash cow for investors. Those ideas are inconsistent. So decide what you want. I tend to lean towards making them affordable for families and not this get rich quick scheme for investors, right? So I think that's my only point. And I'm not blaming investors. Investors are not the cause. I mean, there's so many other factors, but certainly it is not helping. And it's about thinking about the path that we're on as a society. which is fewer and fewer households being able to afford their homes, and asking yourself, is that the way we want to go? Because that's the way our government and Canada's housing experts are taking us down. So you're either signing up for that or you're not, and I'm not. So no, I'm not going to advocate for every policy that puts the incentive in favor of investors over families. I'm going to kind of go the other way and think owner occupied people should be able to own their own home. And that's just, again, personal bias, we'll call it.
All right. Well, we're going to find out more. So I'm presumingly, the next part of this discussion is, what do you do? Do you make taxes prohibitive? How do you prevent certain classes of buyers from buying certain properties? I mean, I think this is part of a longer discussion. It'd be interesting to hear what you've learned from Europe
Mm-hmm.
and what's worked to create that. I mean, is it just I think we've covered a little bit on our show about government involvement, cooperatives, other structures, but I think there's so much to sort of unpack in
Mm-hmm.
terms of, we don't want to fall into that trap that if it worked in Paris, it'll work in Toronto.
No,
It
yeah,
can't work the
no.
other way either, right? So,
Yeah, and
yeah.
it's not again, there's no like one solution. It's not like ban investors, everything's going to be cheap. No, like in Canada, when you're growing by 1.3 million people per year and you're only building 200,000 homes, doesn't matter what you do on the supply side. It doesn't matter what you do if investors, home prices and rents are going to grow because our population's growing way faster than our ability to build homes. So there's no simple silver bullet, and I would never suggest that.
All right. Well, are you now Dr. John signing off?
I'm not, no, I'm not gonna be going by Dr. John anytime soon. Just John is great.
Well, it was a really great discussion. And as I said, I look forward to unpacking more of your ideas with you on future episodes of the show. As always, you can reach John on X Twitter at John Pasalis. You can reach the show at Move Smartly. And we thank you as always for listening and watching, and we'll see you again next week.